Hey traders, we're going to have a quick market update on all the indexes. Gonna make this short, sweet, give you an update, show you what I'm seeing. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, it's good to be back with my voice. My voice is okay now. It took me about a week to get over that Anthony Robbins event. Crazy. Alright, let's go have a look at all the indexes, and I want to share with you what I'm seeing here. So firstly, what I see is looking on the short term of the Dow Jones, and looking at the short term, that we can see that we had this sort of major top through here, come down, we're sort of just going sideways through here. Looking at my indicators, it's stochastic here, and obviously the volume spike, that was because of quadruple witching basically. But I actually do think that we may get a rally back up and close this. We've got this small little gap here. So I actually think that we may actually go up and close that gap. It may or may not happen, but we don't know. But looking at that gap. Now, that's obviously on the short term. Let me go show you what I see on the weekly chart here, because this is really interesting to show you on this weekly chart. One thing I can see on the weekly chart is, let me bring up my trend lines here. You actually can see that that whole level through there, we actually had a bounce off through there, and we had a bounce off through. Now this is a weekly chart. 1, 2, 3, 4, 5, 6, 7, 8, 9. So 2 months worth of sideways movement. We had a breakdown. Now this weekly bar ran up, rejected it off this resistance level, and closed there. That's actually a weak sign. So even if we do get a short-term rally to come up and close that small little gap on the Dow Jones, I do expect to see this type of action, because this looks like it's a bit of a topping play where it is right now. So you can see we actually got through there, broke down, but once again, guys, you can see where we're at right now on the Dow Jones. Now let's go have a look at the S&P, and the S&P is very similar. Is that you can see that the S&P is very similar. That you can see this whole area through here was indeed a area of resistance and support. We can actually see that we had this 1, 2, 3, 4, 5, 6, 7, and then the 8th week we actually broke down. So again, 2 months with the side movement, broke back down, and look what's happening now. We're rejecting off that level on a weekly basis. So there's a lot more sellers coming in the last couple of months than we've seen in a long time. That's again, and we closed right basically there. That's where we closed. So again, a weak sign for the bears. But if we do, it's a weak sign now. But you got to be careful and watch that level through there. So if we start to close back above that on the S&P 500 2,160, we close back above that level, then that's actually a very weak sign. So let's go have a look at the Russell as well too. Now the Russell looks like the Russell may get a little short-term upward movement. I think it's going to be short-lived, and I think it's going to be short-lived with, let me just draw this trend line here. Oh, there it is there. I think it's going to be short-lived into this sort of resistance level where that is right there. So even if we do get a little rally, I think it's going to rally back up to the resistance level, and then we're likely to break down. But I do, for some reason, feel like we're going to get a short-term move to the upside for the start of the week, and then I feel like once the Fed announcement comes out, then moving into Friday, I think we're likely to start rolling back over, and then the week after we just start to tumble even more. That's just my opinion, and that's what I'm feeling that's going to happen by looking at the flow of this market and seeing that. Now let's go have a look at the Nasdaq. The Nasdaq is done exactly what I thought it was going to do. As you can see, it actually broke down, but came right back up and hit this area of resistance where it is right now, and actually closed that gap as well too. So I'm expecting to see the Nasdaq to roll over, and as you can see with the Nasdaq, you can see on the weekly chart that the Nasdaq actually closed back above this, closing halfway through. That on a weekly basis, guys, is a very bullish sign. So it'd be really interesting to see what actually happens with the Nasdaq. But the Nasdaq is the Nasdaq is the most bullish out of all of the markets itself too. So there's a quick little market update, guys. I talked to you guys about the line chart as well too. Let me go back to here and let me show you the line chart. And I did say, guys, looking at this line chart, if we don't get a close back above this 1,800 and sort of basically 18,300 level, around about that 300. If we don't get a weekly close back above that, then that's a very, very weak sign. And someone said on my YouTube videos, John, I agree with you, but you're not looking at all the other indexes. And I would say to you that go back and look at the Dow Jones compared to the S&P 500, that is. And if you compare that, you will see that when the Dow Jones starts to do something slightly different than the S&P, the Dow Jones is trying to lead you. The Dow Jones is trying to show you what's going on. And I'll show you an example here. Let me bring up this chart here. And if I go back to, let me take everything off the screen here. And if I go back to where we actually had this crash through here, right? If we go back and let me just, you'll be able to see back here in late December, what did we actually have here? We actually had what? We had a peak, a lower peak, a lower peak, a trough, a lower trough, a lower peak, and then we had a drop down, right? So what's happening there is that as the S&P is doing one thing, the Dow Jones is doing one thing, but then when I looked at the S&P at the exact same time, let me bring up the S&P at the exact same time, what actually happened here? Well, the S&P, what did it do? It started creating this higher trough, created this higher peak, and had this trough here, had a sort of bit of a double bottom, maybe a lower trough, had this lower peak. So in the exact same time where the Dow Jones was creating a slightly lower trough and a lower peak, the S&P was creating a high trough, high peak. And it was in that time that the Dow Jones was trying to show you a slight leading edge, and the Dow Jones was actually leading us. So that's the reason why, guys, I believe the Dow Jones is the leader of the overall markets. And when the Dow Jones is starting to do something different, especially because the S&P and the Dow Jones should be very, very almost identical to each other, and they are most of the time. But when you start to look at, when you start to see that they change a little bit and they're starting to move a little bit, then you start to see what's actually really going on here. So looking on the S&P, we're actually going back down and bouncing off this high here, right? You got basically that high point through there, so you're getting a nice little bounce off that high. But if you look at the Dow Jones, what's actually happened? We've broke down through here, and now we're breaking back up. That's that slight little differences, guys. And if you go back and study your charts, you'll be able to see, okay, when the Dow Jones starts to do something slightly different to the S&P, the Dow Jones is leading the way. It's trying to show you what's happening. And that's what happened back here in late December as well too. As I just showed you, right? The Dow Jones was making those low troughs and low peaks, showing a slightly more weaker view than it was actually a weaker view, creating those low troughs, low peaks, but the S&P did not. Right, the S&P started creating that high trough and that high peak, remember? So then, but the Dow Jones was saying, no, this was happening. So guys, the Dow Jones to me is the leader of the markets. So you can get like the transportation average, which is like the Dow Jones theory and stuff like that, the Dow theory. But guys, I've studied and analyzed this over the last 10 years, and I've realized that the S&P and Dow move in sync most of the time. But when you start to get a different picture from the Dow Jones, like for example right now, the Dow Jones is weaker than the S&P because the Dow Jones is actually broken below and closed below, now 2 weeks below this high up here, to me confirms a false breakout, and we're likely to start, even if we get a little rally back up to here, and we're likely to start heading back down, even if we do get that rally. But the S&P is actually just at its previous high, or its high from last year. So to me, guys, once again, by looking at that, you start to see the differences in there. So anyway, guys, that's my little update there. That's my little explanation of reason why I'm looking at the Dow Jones only. It's not that I'm not looking at the other indexes and stuff like that. I am, but I just wanted to show you guys what I'm seeing here. So the Dow Jones is a lot more weaker. It's created a false breakout already, and that's a very weak sign, guys. It's a very, very, very weak sign. The Dow Jones is trying to tell us something, and when that happens and it's doing something different than the S&P, which doesn't normally happen, the Dow Jones is trying to tell us something. And that's the reason why, guys, I don't believe we're likely to get more upside. I believe we formed the top, and unless we get a close back above 18,300, if we get a weekly close back above that 18,300, which is still possible, then we're going to see a 19, possibly 20,000 down. I doubt that. And so what I believe is going to happen is that we're likely to start seeing a rally up through here, and then I think we're likely to start seeing some significant selling, or it might just roll off through here right after the Fed announcement this week. So very, very, very interesting pattern that's forming here, guys. Keep an eye on this. Because it's really, really, really telling, and this is the gauge you want to see. For you bulls out there, there's nothing more plain than what we're seeing right now. If you're bullish on the overall market itself, look at the Dow Jones. We're going to close it back above that 18,300. Then you know, right? You know that we're back in the bull camp, and we are likely to keep running back up here. If we don't, and we pause there, or even we just continue down, then we're going to continue down. Right now, it's a lot more bearish. Actually, there is nothing bullish about this pattern here. And so I'm expecting to see this market, even if we do get a little rally this week overall, I do expect to see a rollover into October, and moving into October, I think we're likely to start seeing some significant selling in the markets, because that's what the Dow Jones is telling me, and it's pulling away. And when the Dow Jones starts to do that, something else starts to happen. But again, being a trader, we need to be flexible, right? Being a trader, we need to be able to bend and mold and flex what the market's telling us. Right now, I'm seeing a lot more downside coming because the charts are telling me that. But once the charts start to flip the other way and start to get back above that 18,300, I'm going to turn back to bullish, and I'm going to ride this thing back up to 19,000 and stuff like that. So there we go, guys. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course, and I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.